Okay.
So, a good conversation.
Okay, let me, I know most of you know Ritesh because he's been a regular presenter here, so thank you for coming back this morning. Appreciate that. Been a little bit of an update to his bio, so I'm just gonna read the bio that he sent me. So Ritesh is obviously a well-known investment professional with over 25 years experience in investment management. He successfully developed asset allocation policies and risk management frameworks using his extensive market experience to manage money and grow investor wealth. Now, there's a ton of information here, but I kind of shortened it a little bit on you, Ritesh. So Ritesh has held many senior leadership roles. Needless to say, he's managed the equivalent assets, investor assets to US $6 billion. So, and lots of other multiple, companies with managed billions of dollars. So presently, he's the founder at Pine Tree Macro, based out of Calgary here, a global asset allocation theme investment fund set up with an objective of adding true geographical diversification to investor portfolios. Expats, basically, right?
Yeah, I cannot take money from American or Canadian investors.
I keep trying, but he won't take my money. So,
Can you take money from Kenyans?
No, I can take money only from Indians, actually, non-resident Indians anywhere in the world except US and Canada. Compliance is too big. Such a big headache.
that's a compliance thing. In 2019, LinkedIn rated him among the top 3 influencers in the world of economy and finance. He's also a recipient of numerous national, international awards in the field of fixed income and equity investments. This one's new. Ritesh has been featured among top 100 in finance in North America by Top 100 magazine. And being an avid reader, he's regularly quoted in local and global media. And his thoughts are well summarized in LinkedIn posts where he has 40,000 followers and boasts an annual readership of 5 million. He's also featured on Bloomberg Middle East as a guest speaker covering macro highlights. Welcome back.
Yeah, thank you.
Can't wait.
Let's start. We can start now. I took a lot of time actually thinking about what should be the the title of the presentation this time, and I'm not happy putting this title over here. But somewhere there was no other title which was coming to my mind. It is like we are heading for we all know what is Scorched policy, and this is exactly the way we are going in Canada. I will talk more about it. I don't understand politics. I only understand policies. So I will restrict my comments only on policies and nothing on politics.
So no US prediction for the election today.
I have it on what will be the impact on Canada. That is very important. So this was the slide from the last November. I think most of you were there, where I said there are 3 probable paths for Canada. Alberta, I was very bullish last year also, and this year also I'm very, very bullish. The reason I will talk about it. But these were the 3 paths I talked about, decades of stagnation. This is the most likely path for Canada. I think over the last 1 year, we can say that we are at 0% growth rate of 0.3 and 0.4 kind of thing. Inflate away the debt like what Japan is doing. I think you will find some kind of that thing starts happening in Canada. But I have another probable path of Canada before I depress you with my presentation. The last slide actually is going to be very, very bullish. And there's a lot of investment opportunities if that is the outcome of election today. And the third path is open Canada for competition. I do not think that whoever comes in power, we will not willingly open Canada for competition. In all 3 paths, the outcome for Canadian dollar, Canadian housing and quality of life will be different, but you know all 3 of them and you are feeling all of them of the last year. So let's start with the policies and outcomes. Consequences of failed policy: used to have a current account surplus. Now we have a current account deficit. I'm not talking about export minuses. I'm talking about we have trillions of dollars in our investment fund. Brookfield has a fund, CPP has a fund. It is including the investment income, we are negative. Means export minus thing, exports minus imports, plus investment income from abroad, we are negative for the last 10 years. How is it possible? We have such a large funds which should be bringing back the money for us. And we know about what is our policies, latest policies on oil and gas, which can be a whole lot completely different discussion. And the second part is the per capita GDP. Now, most of you might not be feeling the per capita GDP because you are in that 1 percentile or 0.1 percentile of the society. But I can assure you that 60 to 70% of the people are feeling the same median per capita GDP of 45,000 US dollar for the last 13 years. Your inflation has more than doubled. So what is the outcome of that thing if you have a per capita GDP of exactly 45, 47,000 dollars? Yes, there are other countries also, but those countries are growing. Here we are not growing. When your per capita GDP remains same, you have to maintain the quality of life, and you have an inflation, you end up with having debt. And people with debt never revolts. They want free money. They always vote for free money. Canada's household debt is the highest among all these countries. US actually is much better position because they had a 2008 crisis. They got reset on their balance sheets, household balance sheet. We never got it. We never got our 2008 Lehman movement. But I think we are getting it now. You will see it in the next 12 to 24 months, our Lehman movement, unless some policies change. So this is the household debt to GDP. Canada, 101% is the top. So if our incomes don't grow, and they will not grow without policy changes, we will continue to rake up debt. And what is the biggest one? Mortgage loan, 74%. I'm sure all of you would have heard about China problem. That China has a large number of houses over there built. Nobody is staying in those houses. Chinese have 71% of their wealth in household, in homes. Canadians have 74%. We look down upon China, that how will that country grow? Look down upon us. We, Sweden, Australia, same situation. Because we never got our 2008 even. We should have allowed our balance sheets to get reset when our household debt was lower. Now it has become so big. There is an easy outcome, but that we will discuss later. And you thought only you are the only one who's taking the debt. No, your government is also taking the debt. How is it possible? Government is also taking the debt and you are also taking the debt. Normally it never happens. Normally either the government spends when household doesn't have to spend, or when household are spending, the government doesn't have to spend. And that was a good part about Canada. Government had a balance sheet where if there is a problem at household level, they could spend. But all wasteful spending, either spending at the government level. And I'm pretty sure last year I gave a statistics over here. 1 in 4 person in Canada works for public sector. 23.3% people in Canada works in public sector, means government of Canada. And you know how productive it is. So government debt to GDP, thankfully you're at 101%. US is at 120%. Now let me give you some number. Since 1800, there are 52 cases of countries having 130% debt to GDP. 51 out of 52 defaulted on their debt. By inflating away the debt or outright debt or outright default, like outright default is Argentina. A lot of countries inflate away the debt because otherwise there would be a bread lines over here. The only modern day wonder which has not defaulted is Japan. Otherwise, 51 out of 52 countries, I have a 232 years of data. Sorry, 225 years of data. And this will go up with wasteful expenditure because we don't have the GDP. We can keep on, and in the election year, we will spend more money. And we are suppressing our oil revenues. That's the only thing which could have, you take money from here, you spend it, fine. But you're suppressing this also in your spending. It will not continue. You can see Canadian dollar, how it is behaving. Yeah, I love to say these words. Government is the economy. According to a McDonald's Institute, 51% of Canada's GDP is all because of direct and indirect spending by government of Canada. 51%. And you know about this thing, decline in labor productivity. I was just going through some numbers. Are we better? Fine. I'm not comparing to third world countries. They would be better because of the lower income country. India will be better. Philippines will be better. What about US? There are enough data over there. We are only 70% as productive as Americans. And it has completely collapsed in the last 10 years. How can I shift some jobs over here even if my currency collapses? I cannot shift American jobs over here. There are some jobs, offshoring jobs, which are coming to Canada, but I cannot shift more because there is no productivity. And what will happen if we have AI? Are we ready for it? I know it is all negative and all those things. I was trying to find something positive. Yes, there is some positive at the end of it. Ultimately, I'm an investor. I don't care beyond that. Sorry, you might not be, it might be a little bit, let me give you the, this is your manufacturing GDP. This is your public sector GDP, means public administration, and that is your construction GDP. Last 20 years, your manufacturing GDP is negative. Last 20 years data. What is going up? See the line which is going up, the blue line, government. And the line which is on the top is construction. This is the composition of our GDP. We don't manufacture anything in this country. We used to do it. We just stop manufacturing. You can spend $30 billion on all the subsidies and all to give it to Stellantis and all. Nobody is going to come and produce over there. We are just not productive. We don't have policies to support manufacturing in this country.
Josh, why do you think productivity is cut down so much?
I don't. I cannot answer that question. Simply because I'm not a part of corporate culture over here. I've not spent time on that thing. And I don't invest in Canada. In fact, in Canada also, I invest only in US dollar. I just stay in Canada. This is the immigration fiasco. But you know about it, right? Immigration fiasco, what has happened? 18 months back, we wanted people to come over here. Now we don't want people to come over here. Okay. I do not know which one you wanted to do it. But it has left a bad taste. Forget Indians, which form 47% of all your immigration, and you might not be knowing it. They bring $26 billion every year from India over here. Any new immigrant coming, all the total put together, they actually sell or borrow $26 billion from India to spend it in Canada every year. You might not want them, you wanted their money. And now what you've done? Can't do like this thing in 12 months and 15 months. I'm not the one who's impacted over here, but I also understand 6 years back when I came over here, the bar for entry into this country was very, very, very high. I had to compete with the best in the world. But this you know about. What you don't know about is this. Number of jobs created in Canada, number of LMIAs given in Canada. If you do not know about LMIA, labor market assessment, these jobs are advertised on some dark web page or all corruption happens. These kids come from India or anywhere else. They pay money to come to Canada. They work at the places. They don't get paid. $50,000 per person. So all these your restaurants and all which are working over here, they're all into losses. How are they making money? Every year issue 2 LMIA. Get 2 kids from anywhere in the world. Both of them will pay you $50,000. They will come here, they will work for 12 months without salary. And after they become PR, they leave that place. Then you hire 2 more. That establishment gets $100,000. And those were the only jobs which we created. We've not created any jobs. Our economists don't talk about it. Even if I was working in BNP Paribas or Tata, I would not talk about it. It is my institution will never allow it. This you know about it, and this is the best business. I know somebody who's into insolvency business. They're doing such a great work. Corporations are falling each and every day. So a lot of things are going into insolvency. So anybody insolvency lawyer and all, I'm pretty sure they have a lot of work at their end. This is something about real estate because everybody would want to know about real estate, right? Why am I showing that Canada crime rate? No, it is not. Again, everything is from investment point of view. It has nothing to bring down a country in a bad light. It has nothing to do with that. I stay in that deep southwest and all, and I'm very happy about it. Okay, I'm very happy about my quality of life in Canada, in Alberta, in Calgary. I enjoy staying. Okay, so it has nothing to do with that. I just sometimes see the policies, and I'm an economist. I said, how is it allowed? But I've stayed in India also, so I know there are politics is something different than policy. So, but this is a crime rate. Now, why it is important? Obviously, it is for security purposes, a separate thing altogether. This is why it is important. I can assure you, Vancouver and Toronto real estate is done. If crime rates goes up, irrespective of interest rates. And secondly, 3 years back, US Justice Department put a report in public domain. That report is not there anymore. We are allowing fentanyl money to be laundered in Vancouver real estate. Americans are dying every day, and their Justice Department, this is what you guys are doing? So what you saw on TD on that day, it is not only going to stop. It is going to become very difficult now for our banks, which turn a blind eye to that. But beyond that, if you believe crime is going to go up anywhere, real estate is done over. It's a very simple correlation. Go back anywhere in the history. Maybe the prices in gated communities will go up. In Wildwood, where I stay, carjackings have started taking place. Wildwood. We've seen it in Rust Belt. We will see it in Calgary, Vancouver. And so if you see any bounce happening in Vancouver and Toronto, it is like because in our mind, every time interest rates are cut, you go ahead and buy Vancouver, Vancouver and Toronto real estate. No, that is not there, going to be true anymore. And for one more reason. Sorry, this slide came in between, but I just wanted to show Canada's gross domestic product by industry. This is what I'm most interested in. I wish we could go from 4.5 million barrels to 7 million barrels every day. I wish we have those 5 LNG terminals so that world take notice of Canada. We have something to give to the world. And when we go and cry to our partners and all, they take care of us. We don't have anything. Oil is the biggest thing which we have. But this is the reason why your real estate is done. Second reason. You know the kind of money which has come. Every country is doing. France is also doing. UK is also doing. Because all the governments are in deep shit. They need more taxes. So if Chinese are going to do this thing, tell me how is Chinese money going to come over here. So keep an eye over here. Real estate is going to become very, very liquid. Plus, obviously, we do not have the support of immigration anymore. So this is your average sold price. This is your transactions. Transactions, you will find that transactions maybe can go for the next 2-3 months. They will not go beyond that. Why? Because interest rates are going to go up. I don't care about what Bank of Canada does to interest rates. Market interest rates are different than what Bank of Canada wants.
Residential.
Sorry? Yeah. Sorry. oh yeah, WOBA. So this has to be residential. And actually, if anybody is looking for a good data, this is a fantastic website. This is where I'm very, very positive, only because of this. The biggest money will be made where all these data centers will go. These data centers have been told just to take care of your own power needs. There is no other place better in North America, better than Alberta, to have all these data centers coming over here. And I'm finding more and more positive news over here. If you believe that data centers are going to come in Alberta, I can assure you, the Alberta economy will be completely different than Canada's economy. Forget oil and gas also. You can do all what it is. This is where the next 10 years, big money will be made in data centers. Wherever they are going to go, real estate trends will be completely different. And you know that these mega cap tech companies, they have more money than some countries also. They're just asking for power needs. And I remember, reading about a statement from our premier. We invite data centers, but we want them to take care of their power needs. So I do not know how it is doing. They are talking about nuclear over here, small SMR reactors. There is some positive news. Just keep an eye on this thing. In fact, if this is true, Calgary real estate will double in the next 7 years. From here also. It's all about liquidity. Wherever the liquidity goes.
Sorry, are you saying that Calgary real estate will double because of data centers or because of power consumption?
Data centers. If data centers were to come over here, if Meta or any of these mega cap tech companies were to put up data centers over here, like Rocky Mountain, they're talking about something over from here. They're talking about putting up big data centers over there. Real estate prices start moving up very near because a lot of money comes.
I certainly get that, but there's very limited people that actually are employed by these data centers. Now, maybe there's spin-off.
It's a tertiary industry which you create around that thing. So I have a lot of data on that thing. It's a tertiary industry which you create around that thing. So wherever this data centers goes, and they buy millions and millions of square feet of places just to put these data centers. Gold versus real estate. Okay, again, the chart is, I don't know, I should have looked at it. This is the price of gold. This is the amount of gold reserves which Canada has. 0. It was not like that. US has 7,000 tons of gold. In 1960, Canada had 1,000 tons of gold. We systematically sold all our gold. We are actually one of the few G7 countries which don't hold gold. UK has gold. Switzerland has gold. Germany has gold. Yeah, France has gold. And obviously US has 7,000 tons of gold. Why did we have to, if we are a part of G7, why did we have to sell our gold? And this is, Canadians have less than 1% of their wealth in precious metals. Actually, it is North America. I have the North America data, so it is true for Canada also. Less than 1% of their wealth in precious metals. This is the house price index. This is the gold index. Gold is the only real money. And people don't have. So here I'm not doing marketing, but if anybody is looking to invest, Costco has really good deals. And actually the pricing is the best I've ever seen anywhere. Sorry?
Those gold ads are on TV.
Yeah, now it is like everybody, it's like, for the time being, the top might be made for the near term. But if you're looking for 5 years from here, I can be on record to say that it will at least double. As Indians or as third world country, you have to understand that you never believed in your government. So you had that gold, like Indians have at household level. We have 20,000 tons of gold. This year, mark-to-market profit of that 20,000 tons of gold in India at household level itself is $600 billion. So we never believed in our government. But here in Western world, we believe in our government. We say they will take care of us. They will not reduce the value of money. And that was true till few years back. I had to put over here for simple reason. It has nothing to do with politics. It has to do with this. This is going to be the fastest growing country. I can't go up to 2071 and all, but this is going to be one of the fastest growing countries. We need it for our pensions, our society. We are aging. We need that country for our pension assets to grow. Canada is growing at 0 to 1%. Add inflation of 2-3%, so we grow at 3 to 4%. India is 6 to 7% GDP growth rate, 5% inflation. India is growing at 12 to 13%. The more we age, the more higher yielding assets which we require. So we are not in good terms with US, we are not in good terms with China, now we are not in good terms with India. But having said that thing, over the last 15 days, Canada Pension Plan has invested in 2 IPOs in India. So I think government to Mr. Justin Trudeau, whatever is happening is different, but at least on investment side, it is continuing as it was before. So I was happy to see those kind of investment being done. So one company was Hyundai India, the other company was a large infrastructure company in India, which CPP has invested in the last 15 days. But
So Ritesh, I have a question on that. So, I mean, obviously, we don't have a good relationship with India. And so what if India says, we're not letting you invest in India anymore?
yeah, so that is the next thing. So look, India was always a capital deficient economy. Canada has a lot of capital. We invested that capital in India. It was a very good, you make money out of that. We get capital to grow, right? This was how it is. But today India is getting capital from everywhere in the world. That it can choose which capital it wants and it doesn't want. If it continues beyond a point of time, I don't think it will. Then this will not, then India will have to put a stop. They put a stop to a lot of other countries also, they will put a stop. So forget the politics part. We need them only for this thing. My pension depends to some part of investing. Globally, India is also an important part. That's it. Canada interest rate outlook. So this is very important simply because a lot of people take their, every time Bank of Canada cuts the rate, the first thing I get in my feed is buy real estate, and there are so many of them, channels and all, everybody keeps on talking the same thing. So in spite of cutting interest rates by 125 basis points, we are still growing at 0.3%. This is Bank of Canada interest rate from 5 to now 3.75, another 50 basis point coming because we grow at 0%. So we will go down to 3.25% on Bank of Canada interest rates. So mortgage rate should come down. Our bond yield should come down, right? It is very simple. This is how it happens. So this is Bank of Canada interest rates. And the bond yields have started moving up. Market doesn't want to give money to Canada at lower interest rate. So our mortgage is not a function of Bank of Canada interest rates. Our mortgage is a function of market determined interest rates. Market determined interest rates are now going up. Market is saying, we will not give you cheap money. You're not using the money properly. Same thing has happened in UK, where 2 years back, Liz Truss, just because the bond market blew up, Liz Truss had to leave on that day. Same in last 15 days, UK also is having the same problem. Germany is having the same problem. All G7 countries have started seeing bond yields rising. If bond yields rise, then what you can only take is 1 year a variable. 5 years, rates will not come. If that doesn't come down, then how can we see a resurgence in the real estate? We cannot see that. Okay.
So just to understand that again,
Yeah.
you're saying don't expect mortgage rates to follow interest rates down at the end of the day.
Yes, it normally used to happen.
Yeah, 'cause they would always have that.
Last time our debt to GDP was low. Rest of the world was willing to give cheap money to G7 countries. Now saying the more you cut the rates, the more we want a premium for you because inflation will come back fast. If inflation will come back fast, then we cannot give you cheap money now for 5 years. economic outlook. Here I'm very, very positive, simply because of I am expecting some kind of election results today. So just first read this thing actually. If President Trump comes, this thing is going to happen. There's a $10 trillion economy, $10 trillion opportunity over the next 6-7 years. It will be distributed in the region. How it will be distributed is very important. I'm taking into consideration that the next president will be the President Trump in the United States. I'm making my thought process as on that. If it changes, I change my view. I believe he will be the next president of the United States. What does it mean for Canada? I'm firmly of the opinion that if we have President Trump in the White House, then Canada, whoever is in power in Canada, does not matter. Will be forced to accept whatever role the US assigns to Canada in the US quest for reindustrialization. And that roughly means they will decide what we will do, irrespective of whatever policies or politicians are talking about. Plus, US MCA will be renegotiated. 2026, it will be done. They will not give the same right now to Mexico and Canada. They will tell us, we will produce and you will extract in this country. This is where my next big opportunity for investment. If President Trump comes, I would say extraction is going to be the biggest industry in Canada. Extraction of what? What US needs for its reindustrialization. Canada will be forced to increase its defense spending. Canada will not be on the same footing under US President Trump. Forget about what our politicians are doing. They will not be in charge. And he is going to deal exactly the same way, not only with Canada, like Europe. They've not been spending on their defense. They will have to ramp up their spending if they want to be in NATO. Canada will have to ramp up its spending if it wants to be a part of NATO. So I will, as soon as, if President Trump is in power, one thing I'm pretty sure about it, Alberta is in a different level altogether. Forget Canada, I don't care about it. Extraction. Whatever was decided yesterday by our ministers and all have no meaning. I don't even care about it. They want us to do this because they want to industrialize. They say, so how has the world changed? 2000 to 2002, you allowed China to become a part of WTO. It should not have become big. But US corporations became greedy. They prevailed upon Mr. Bill Clinton to allow US corporations to go for cheap labor in China. They allowed China to become a part of WTO. And all the work was offshore to China. That's why you created Rust Belt, a lot of jobs, all blue-collar jobs went to China. From 2016, when President Trump came, he understood that this is his vote to place. Today, 71% of people in US, as per Gallup poll, wants to be a part of union. We understood that. And now his entire thesis is all about blue-collar jobs, blue-collar jobs, blue-collar jobs. And reindustrialize US, make US isolationist, bring back our army from everywhere else, no aircraft carrier, let's rebuild America. And we will have a very big role to play in it. And there's a lot of investment opportunities, but obviously I'll have to wait for the results. After that, I'm very clear about it. Then I'll have to start looking for investment opportunity in Canada, and who knows, Canadian dollar might not even depreciate also. But if that does not happen, then that's a different discussion. So you can follow me on LinkedIn and Twitter. I have a private WhatsApp channel for my investors. I send a lot of stuff to my investors. but that is only to my understanding. So you can follow me on that. And I have to show this thing because it's a disclaimer. Without that, my compliance will continue.